and welcome to another Smaulgld live stream. It is the 1st of January 2020. Happy New Year. And today's topic is gold priced in dollars and foreign currencies in 2019 augurs well for 2020. We're going to go into why the increase in gold this year, more than the increase in perhaps 2016, is indicative of a bull market. We're also going to look at gold and foreign currencies. Last year, or let's say 2 years ago, 2018, we saw gold rise in nearly all currencies other than the US dollar. This year, gold rose against the dollar and all other currencies. Now that's very, very important because if you listen to the gold pumper channels, they just talk about as if no one wants the dollar, dollar collapse, end of dollar hegemony, multipolar world, all that nonsense that you hear, and that mathematical certainty, US has too much debt, death of the dollar, dollar's days are numbered. They're not really analyzing, they're just projecting their, I guess they've built in a hatred towards the dollar and a love for China and China's love for gold, but it really is an analysis. I'm going to show you why the gold price rise in 2019 is significant for a gold bull market. See, the perma bulls just tell you everything is good for gold because the dollar is going to collapse. Well, that's not really true. What is true is there are limits on how high the dollar can go relative to other currencies before it becomes a problem, before the officials take action like the Fed. And there's a limit to how high stocks can go just based on what you would think, price earnings or some metric. They just can't keep rising with some justification for them to go higher. However, gold and silver really don't have any limit on how high they can go other than investors' willingness to pay for it. All right, so let's get into what happened in 2020 with the gold and silver market. Now, I'm not going to show you all the charts. They're going to be up on smaulgld.com later today or tomorrow. And I'm not going to publish the silver charts this year because they are substantially similar to the gold charts. Now, that hasn't been the case for years now. Gold has been plodding along, going up some years, but silver has just basically been going down most of the time other than 2016. So there was quite a difference between the gold price and the gold charts and the silver charts. This year or past year, in 2019, there really wasn't much of a difference. So there's no point in just showing you the overlay of the gold and silver. Now, that's a significant point anyway. The fact that gold and silver tracked each other this year, to me, indicates that gold and silver were going higher on the basis of their monetary component. That silver had actually caught on to the concept that it has that monetary component. Investors caught on to that, and therefore silver rose with gold. That is a very good sign, something I've been talking about for years, that silver will not go higher unless it gets some type of commodity boost, which it hasn't had, unless it gets a backdraft from the gold price rising. And that happened in 2019, so that's very significant. And we have shown you that the gold-silver ratio, and I've said for the last 5 years, was justified going higher. Let's take a look here before we get into the charts on the price of gold in dollars and foreign currency. You can see here the last time the gold-silver ratio was low was at the height of the gold and silver bull market in 2011. Got down to about 32 to 1. When that bull market died, silver plummeted it and gold plodded along, tried to make some highs, 1375 a couple of times, but it pretty much stabilized between 1200 and 1400, whereas silver fell from 50 down to $12, $13 and just stayed there. And you can see the impact it had on the gold-silver ratio. The gold-silver ratio rose from 32 all the way up to 85 to 1, almost up to 95 to 1. And that's when all the silver pumpers were out there saying, unsustainable, this is the year, you got to flip your silver into gold. Well, had you done that, you would have just lost more and more fiat dollars. You can see there's been a steady increase in the gold-silver ratio. However, This year, because both metals rose, the gold-silver ratio increase was halted. This chart shows the 2019 gold-silver ratio opening at about 80 to 1 and closing at about 84 to 1. Not much of an increase. It had increased all the way up to about 94 to 1, but then silver also started to rise and rose about as fast as gold. And so it looks like for now, as long as gold continues to rise, it seems that silver is now following along. And in a sustained bull market, silver not only follows along, but passes gold in percentage gains because silver is a smaller market and it doesn't take much to ignite the silver market. All right, let's get into now the price of gold versus the dollar. But before we do that, let's look at the dollar index this year. This is why it's important that gold rose this year more than other years. The dollar index actually rose this year. Now, if the dollar index rises, that means that investors are putting money or trust in the dollar, and therefore there's less of a need to put money into gold. That's generally how investors think of things. Gold is a hedge against a dollar, wouldn't necessarily say collapse, but it's a hedge against a weaker dollar. The dollar was strong this year for most of the year and did finish the year higher. It had opened up in the 95 range and it closed around 96. Now, it had hit around 99, but the dollar was strong this year, and yet gold still rose close to 19%. That is very, very significant. I'm going to show you why, and then also what impacted the dollar index. Let's look at a 10-year dollar index chart. It's very similar to your gold-silver ratio chart. Where is the dollar index at its lowest? Well, in 2011, at the peak of the gold and silver bull market when gold hit $1,911 and silver hit $50. That's when the gold-silver ratio was at its lowest, and that's when the dollar index was at its lowest. You can see it was down about 72. And you can see the dollar index rose pretty much from 2011 through 2017, took a bit of a hit in 2018, but since 2011, it's substantially higher than it was than 2011. So you've got 8 years of, I would say, a dollar index bull market. But if you look at 2019, for most of the year, the dollar index rose, and still gold rose higher. Now, what drove the gold price higher this year? Gold wasn't really doing much this year. I'm going to show you the 1-year chart, and the silver chart is very, very similar. The 1-year gold chart was showing us moving up about, it took till about July for gold to take off. Now, why was that? Well, let's take a look at the chart first. Here's gold versus the dollar. There it is. Look at gold. From January to June, it's plodding along around 1280, got up to 1340 in February, the beginning of the year rally, but it didn't really start to take off until around June, July. Well, that was around the time when the Fed started giving hints that it was no longer going to be raising rates during the year and possibly cutting them. And what happened in 2019? The Fed actually cut rates 3 times. This is very significant because the Fed had said that they were going to raise rates at least 2 times in 2019. It turned out they lowered rates 3 times at the second half of the year. And look at that chart. That's where you see gold take off. Not only did the Fed do 3 interest rate cuts, they also engaged in this repo funding and liquidity, and they kept doing it, and they've increased their balance sheet. Now, these are things that drove the first bull market in gold, the most recent bull market in gold, 2009, 10, and 11. QE, taking interest rates down to 0. Well, right now, we're heading in the same direction. It's called not QE, this injection of liquidity. For whatever reason, they're doing it. Even if there's not a financial crisis looming, the Fed is still pumping money into the system. And that's free money. They just print it and they lend it out and they take collateral for it and they just keep pumping it's an artificial inducement for the banks to lend money to each other overnight. And they've lowered interest rates 3 times. So we are now headed in the opposite direction. So after years of a tightening or threatening a tightening policy from 2013 when they stopped QE to threatening, even during QE 3, they were talking about tapering. Then they were talking about raising interest rates. They did that for a couple, and then they raised interest rates. And then they talked about normalizing interest rates. All that had the impact of keeping the price of gold down. And going into 2019, they were talking continuing to raise rates. Well, this is a big reversal where we now have 3 rate cuts, and we have this not QE going on, and we have potentially coming out in 2020, the Fed asking for or coming up with a plan for how they might be able to buy more assets under their charter than they're allowed to buy today, because today they can only buy mortgage-backed securities and U.S. Treasuries. They can't buy corporate bonds. They can't buy the stock indexes. All right, so you can see that this year, gold took a very big rise from about $12.80 to $15.50 in September, from June to September. And even though it sold off a bit, it ended the year on an upswing and it closed at about $15.15, which is where we are today on the 1st of January, 2020. A very significant move, gold in dollars. Before we look at the foreign charts, I also want to show you gold versus the Dow. Now, this is important also because, as we mentioned at the outset, there is a limit to how high the dollar index can go. And when the dollar index has to be cut, and again, the cutting of interest rates does eventually have an impact of cutting the dollar's attractiveness. Because remember, one of the reasons I said in 2013, 14, and 15 that the Fed would raise interest rates was because they needed to put some distance between themselves and other foreign central banks. If they wanted to remain the world's reserve currency, they wanted to retain the ability to issue debt to foreigners, they had to pay a rate of interest. So getting off of 0 interest rates was important. And so they did indeed raise rates, and they still have a positive rate of interest. And that's why the Fed is saying they don't want to rely on interest rate manipulation lower to stimulate the economy or to avoid a recession. They want to buy assets. So that's why this year, during the year, we'll probably get something from the Fed. And that should drive equity markets wild, because if the Fed will ask to purchase equities or corporate bonds, that will make the equities go higher. It may have a weakening effect on the dollar, but it should also help gold as well. But look at this year. What happened in gold was up 19%, silver was up almost 16%, but the Dow was up 20%. And the NASDAQ and S&P indexes were up even higher. Again, there's a limit to how high NASDAQ and S&P can go. There's a limit to the dollar index. There's a greater limit to the dollar index than there is to the stocks, as we've seen. The government will intervene to lower the dollar if it gets too high, because they don't want the dollar to be too high. But they do want the stock market to go higher, so they can really boost the stock market. But in doing so, that would require them probably to cut interest rates and to buy assets, and that also is good for gold. So 2019, to recap, before we look at the charts of the other countries, we saw all 3 assets rise together: the dollar, the stock market indexes, and gold and silver, with silver being the actual laggard in that. Now, if this dynamic is to continue with lower interest rates, with the potential for the Fed to get involved or announce that they want to continue to do QE, not QE, which they'll probably continue to do as well, that would mean positive for stocks, positive for gold, and negative for the dollar. Now, when the dollar is negative, that's good for gold. And we saw this year, or 2019, that even though the dollar had a good year, gold outperformed it. And I would think that the dollar index now is probably going to weaken some more, which would mean if there's strength in gold, then you're going to see some higher gold prices versus the dollar. Okay, now let's look at gold versus some foreign currencies. Last year, as we mentioned, gold outperformed pretty much all foreign currencies, but gold fell 2.5% versus the dollar. But look at gold versus Argentine pesos the past year. You don't want to, I mean, it doubled. You don't want to be anywhere near the Argentine peso if you live in Argentina. You're going to want to have something other. Went from 45,000 pesos to Levante peso. It went to 90,000 pesos. It's not something that you want to hold. You just keep going down the list in alphabetical order. Australian dollars. We also had a big increase in gold in Australian dollars in 2019. Versus the Australian dollar, up 19.3%. But last year it was up 8.3% in 2018. And as we mentioned, the dollar, gold versus the dollar, US dollar, was down 2%. So you can see Australia has now had an up year in gold every year since 2014. It was up 7.8% in 2014. It was up marginally in 2015. It was up 10.5% in 2016. It was up 4.6% in 2017. It was up 8.3% in 2018 and 19.3% in 2019. So gold versus the Australian dollar has done very well. The Australian dollar has been falling versus the dollar and the US dollar and versus gold. If you go over the Brazilian real, and it's kind of somewhat of a joke currency, but you've got the same story there. Gold well outperforming the Brazilian real in 2019, up 25%. And like the Australian dollar, up every year since 2015, 33% in 2015, 15% in 2017, 16% in 2018, and 25% last year. This highlights that gold is a store of value globally. May not be always going up against the dollar, but that's because the dollar's had a very strong run. We've seen that the last 10 years. Look at the British pound, same thing. Now, the pound actually recovered in 2019. There's less and less concern about Brexit now. The gold versus the pound in 2019 actually was only up 14.5%, less than gold was up versus the dollar. But it was also up in 2018, 3.8%. It was up 3.2% in 2017. And the year they actually voted for Brexit, it was up 30%. So the British pound took a beating versus gold and the dollar in 2016. Keep going. Canadian dollar. Canadian dollar strengthened this year versus the US dollar, but the story is similar to the Australian dollar in that gold was up in 2014, 7.8% versus gold versus the Canadian dollar, up 7.4% in 2015. Gold was up 5.9% in 2016, up 6% in 2017, up 6.3% 2018, and up 13% last year, 2019, showing that the strength of gold is a store of value. Even though in America versus dollars, you think gold hasn't done very well, against all other currencies since 2014, it just keeps going higher. It means that the dollar has been very strong, and that's very significant because this year the dollar was strong and gold still powered past the dollar and was up 19%. And as I mentioned, I don't expect the dollar index, the Trump administration, the Treasury, or Powell to want to get the dollar to be too strong. They're looking for inflation. They can't allow that. So they're going to want to at least keep the dollar index around the 90s range. They will not stand for it to go over 100, I would imagine. And if it did, they would probably take dramatic action. But that's not going to stop the dynamic of all the negative yielding bonds that are out there in the world, 27, 28%. It's not going to stop the trade tensions. And it's not going to stop the fact that the U.S. does have a massive deficit. China has massive deficits. The ECB does. All countries have massive deficits. And then again, that's very attractive for gold. Speaking of China, let's take a look at gold versus the Chinese yuan. Again, it was up significantly. Chinese yuan weakened this year. You can see on the chart there. You could start the year at about 8,800 yuan to get an ounce of gold. Now you have to pay 10,600 of those yuan versus the RMB. Gold was up over 20% in 2019. It was up 3.5% in 2018, up 6.4% in 2017, 16% in 2016. So you can see that gold has been on the upswing globally for the last 5 or 6 years. just only in the US as it started to catch fire. And that's significant for silver. I'm not eliminating silver, but silver right now is the tail, not wagging the dog, but it's just the tail of all this. Silver is going to track gold for a while, and if gold continues its upswing, I do expect then silver to start to outproduce gold. The euro got rocked this year, and versus gold, it was the worst major currency. Gold was up 22.7% versus the euro, and it was up in 2018. Now in 2017, gold was down a little because the euro was strong, but that was all based on people concerned about Brexit. So the European safe haven, I suppose, was the euro. But it was up in 2016. And gold versus the euro has done very well, just as it's done against all major currencies and all minor currencies, even more so. Moving on from the euro, let's look at gold versus the Indian rupee. Same thing. Big increase in gold versus the Indian rupee. We were up 21% in 2019, up 6.6% in 2018, 6.4% in 2017, 11.6% in 2016. Gold solidly in a bull market in India. But for silver, that bull market that we've seen the last 4 or 5 years globally only really took hold last year. We saw declines in 2016, 17, and 18 in many of the global currencies as well as the US dollar. And that's the difference. That's why 2019 is significant, in that silver participated globally versus all foreign currencies, rose against all foreign currencies, and rose against the dollar. Not as much as gold, but that's okay because we don't expect silver. Silver is not the go-to monetary metal, despite what the silver pumpers may wish you to believe, because the silver profile demand is only 10-15%. The rest of silver trades on its yoga pants and its demand for electronics and solar panels, which the electronics demand has actually declined over the last 10 years, and the solar demand is up only in the upper single-digit percentages each year. It's not that significant, and the yoga pants is just a joke in the amount of silver that they put in those. So silver is not rising because of any demand for industry. It's starting to rise because there's increased investment demand, as we've seen in other Smaulgld videos when we've looked at the ETF demand and the open interest on COMEX, and the amount of silver that's in the COMEX warehouses is increasing. So silver is becoming attractive to investors in some respects as a baby brother to gold. If we go on, gold versus Japanese yen. Now the yen has been a strong currency, and this should tell you something. The yen is far worse than the dollar in terms of how much debt the country takes on, what their finances look like, and yet the yen is a very strong currency. And versus the yen, gold was up less versus the yen, meaning the yen was stronger than the dollar in 2019. Gold was up 17.7%, was actually down 4.7% in 2018, was up 8.8% in 2017, up 5.4% in 2016, and down 9.9% in 2015. So the yen is held out, but still, you could say that gold is in a bull market in Japanese yen as well. And again, in all the other foreign currencies, the weaker currencies, gold has been in a bull market for 100 years. It's always been in a bull market because your average fiat currency and your lesser fiat currencies are no match for gold. Now, some people would say that no fiat currency is a match for gold. Alan Greenspan said that not even the dollar can compete with gold. And that is true over time. But we have seen this period of time where central banks can manipulate currencies higher, and the dollar is the one that they can make the strongest through manipulation of interest rates, and also encouraging other central banks to do the same as the Fed did. One of the reasons the dollar is stronger now, one of the reasons I said that the Fed would raise interest rates, was that I knew that the Fed would convince other central banks to engage in QE, and I knew the other central banks would also lower interest rates. And in many cases, not only did they lower interest rates to zero, they put them to negative interest rates. Bank of England, ECB, Bank of Denmark, and then they also did QE and are still doing QE. and have done QEs larger than the United States. And Japan is also on a massive spending binge from its central bank. And its central bank owns, I think, more than half of the Japanese ETFs. And they buy all the Bank of Japan bonds, government-issued bonds, and they have a massive deficit, and yet they have a strong currency. Gold versus the Russian ruble. Actually, gold was weakest against the Russian ruble in 2019. Now, that perhaps explains why the Russians slowed down the gold purchases in 2019, because gold was only up 6.5% versus the ruble in 2019. It had been up significantly in 2018, up 18%, up 6% in 2017. But in 2019, the ruble strengthened and wasn't up as much. Gold was still up against the ruble, wasn't up as much as it was against other currencies. And I think we got one more. I think we want to do Turkey. Now, Turkey's been buying gold, but Turkey is a mess in terms of its international status. And, well, before we do Turkey, let's look at gold versus the Swiss franc. Swiss franc, also a very strong currency, despite its Swiss National Bank's efforts to depreciate it, to debase it. It's still a strong currency, but gold versus Swiss franc was up 17%. The Swiss franc is pretty much the closest thing to the dollar in terms of its relative strength. Gold versus the Swiss franc in 2018 was down, just like it was down versus the dollar, up 8% in 2017, up 10% in 2016, but down 10% in 2015. So the bull market in gold in Swiss francs and US dollars appears just to be taking hold, whereas in other currencies, it has taken hold for the last 3 or 4 years now. Let's skip Turkey. You can look at that on the Smaulgld.com website. Now, let's look at Turkey. We got a second here. And there's Turkey. I mean, it's like the Argentine peso or the Brazilian real. It's a currency no one wants. And let's see, what was it up this year? It was up like 80% or some ridiculous amount. I don't even think I calculated it. Same with Ukrainian hryvnia. I mean, these are currencies where it was up 30% versus the Turkish lira, up 37% in 2018, 21% in 2017, 31% in 2016, 12% in 2015, and silver was up 27% last year versus the Turkish lira. So, I mean, since 2015, you did not want to hold. Well, there we go again. So I start talking about Turkey. I said something negative, and then boom, got cut off again. I hope we're still live here, but that's my first YouTube cutoff. Some of you still love it. I don't know why you do. I mean, they are censoring everything. You're not allowed to say certain names. They delete channels and then say, "Oops, sorry, didn't mean it." There's no excuse for that, and I do encourage you to subscribe to Smaulgld.com or BitChute. This is probably my last year on YouTube. I mean, this happens all the time, and I don't know. I've just seen too many channels get hit over the head, and then they beg YouTube to keep them on, and then when they get put back, they thank them profusely. "Oh, thank you, YouTube, for finally listening to us." There's a bunch of nonsense. They're not listening to anything. They're trying to get rid of these channels, and they're going to get rid of them. And the worst part about it is you see on social media channels that have been getting trashed by YouTube still posting on social media their YouTube links. I never do. I only post some of the Smaulgld subscribers, patrons, and subscribers. They want the YouTube. I do it. I put them up. But generally, once I do the live stream on YouTube, I don't post the links on any of my social media accounts. I post the BitChute links. I mean, there's no different. It's the same thing. But I know a lot of people, they hate YouTube, but yet they can't leave it. I will leave it when I have a live stream alternative. DLive is not an alternative yet for me. You have to have a certain amount of subscribers. I don't have them to go live all the time. BitChute says they're going to have it this year, and then I won't do this one anymore. And I don't know why that's such a big deal for people. If it is, then you can stay until your other content providers get booted off. And again, as far as I'm concerned, I don't even say anything that's I would deem controversial, but no one thinks it's going to happen to them. And I just seen too many channels get hit with ridiculous strikes and get their whole channel just disappears. Some of them don't come back. You always hear about the ones that come back, but some of them don't come back. All right. I also want to wish everyone a Happy New Year, but I do want to thank Fiona. She sent me a very nice New Year's gift. I do want to share that with you. Check this out. This is what makes the Smaulgld channel worthwhile. Look at that. Now, we got a Happy New Year card. You really can't see the Russian coin there. That is a Russian ruble, and it is a silver coin. And also, those are crystal cufflinks from the Ural Mountains, which, and if you know your geography, that is the mountain range that pretty much separates European Russia from Asian Russia. So a big thank you to Fiona for that very thoughtful gift there. And let's take a look now what you guys are saying in the comments section. I get over to the comments section here. See who we have. Oh, we got Ann and there's Fiona. Thank you, Fiona. We got Rob Gibbs here. Roger Henley, Internet Tough Guy. Yeah, Matthew says YouTube went crazy in 2017, banning everything controversial. Yeah, what I'm surprised about is, my influence on YouTube is 0. But if I had a large channel, and none of the large channels are doing this, they're not leaving. They're insisting that they have to stay. I can understand staying, because obviously I'm staying, but they're not making any effort to leave. They're trying to convince YouTube to keep them, which I think is a mistake. I don't know. Some people feel they have a right or they're entitled to be on YouTube. It's a public square. They have to let me stay. But I would think that if YouTubers just left, then their audience would leave with them. I don't know. I don't know what to me, watching a video is watching a video. I don't think it matters. It's like, what's your TV channel? Whether you have a Sharp TV or, I don't know, whatever brand you have. I don't know what, the show is still the same. There's no special feature on YouTube, at least for the content I put up. It's just me talking and showing pictures and charts. You can watch that on BitChute. You can watch it on any channel. Okay. Fiona, Smaulgld, I'm happy you liked it. Of course I liked it. It's very nice. Look at that. Let's put it back up. There. It's still up. I don't have to put it back up. You guys can see it. And David Cox looking forward to Brexit this year. Well, yes, that is going to be an interesting year, and who knows if it'll even happen. But I think that whatever's going to happen with Brexit is already priced in, just like I think whatever's happening with the Chinese deal. That was all trading noise. There's no real significance in a Chinese trade deal because all it can be is a better deal, but it was just the uncertainty that was driving the price of gold this year. What really drove the price of gold this year is obvious. It is the Fed's change in interest rate direction. That was the main thing. Didn't happen on the day, but you can see it on the chart. The longer-term chart shows that when the Fed is in a tightening or threatening tightening or talking tightening or actually tightening and not talking about ending tightening, then gold and silver go down. When the Fed is loosening and doing QE, that's when gold goes higher. The only time gold didn't go higher when the Fed was doing QE was QE3, because no sooner did they start doing QE3 did they talk about how they were going to stop it, which indicated that there was light at the end of the tunnel. But in reality, there really wasn't. But they did. They did do a 2-3 year interest rate hike cycle and never normalized rates. But now they're at the whole, we're lowering interest rates. We're doing the not QE with the repo market. And then, of course, the rest of the world is still going crazy. ECB and Japan and China being the worst offenders in terms of printing their currency and debasing it and trying to stimulate the economy. All that's good news for 2020 gold and silver prices, if not good news for the world economy. All right. So I want to thank everyone for joining me today. And I think next time we join, I want to do something on American Silver Eagles and Canadian Maple Leafs, Silver Maple Leafs. But I also want to cover some interesting crypto news, which I'll probably do later on this week. Thank you, everyone, for listening. Have a good night.